Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. My guest today is Tim Seymour, founder and CIO of Seymour Asset Management and co-host of CNBC's Fast Money. So we are talking about cannabis investing and the Amplify Seymour Cannabis ETF, ticker symbol CNBS, which is one of the best performing ETFs in its peer group this year as well as over the past year. And we'll also talk about the broader market. Tim, welcome back. Great to have you on the show.
It's a pleasure to be here, Nina. Thanks for having this conversation with me again today.
Sure. So we have seen that stocks have been on this roller coaster ride since Friday, and that's mainly on concerns related to the new variant of the coronavirus. And yesterday, Fed Chair Powell said that he's retiring the word transitory, which he has used to describe inflation here in the US for months now. And he said that sustained inflation, which could result from this new strain of the coronavirus and supply chain disruptions, that could force the central bank to accelerate the tapering. And stocks have rebounded today. And for the purpose of reference, we are recording this on December the 1st. So could you unpack all this recent market action for us?
Sure. And it is all relevant to the cannabis space too, in some sense, because volatility more broadly for higher risk asset classes that have shallower, both institutional following and overall even just operating history are naturally going to be thrown around that much more in a period of volatility. And so what's interesting before addressing Powell is that, yes, since really Friday when we began to understand that we are facing yet another variant threat in COVID, what you've seen across all high multiple stocks, and just call them higher risk stocks, and some of the more thematic stocks. I mean, they're down substantially, but they're down not just from Friday. If you look at high multiple tech and high multiple, call it thematic, whether it's EV or other sectors, and cannabis would fit that sector too. In many cases, you're talking about stocks that are down anywhere from 50 to 75% off their 52-week highs. So we're not just talking all-time highs. We're talking about somewhere within the last 12 calendar months. And in many cases, it's over the last 3 to 6 months. So, yeah, I mean, and some of this is a function of a Fed that's been starting to signal a change in view and maybe suddenly is recognizing that where they thought certain threats on inflation were transitory, that they are now of the same view that a lot of other of us already had, which is they're not transitory, and it's not just COVID dynamics, and that obviously services inflation, higher wages are things that, by the way, culturally, socially, are probably great things for this country, are inflationary, and that we're actually only seeing the early stages of some of that. So the Fed has pivoted, and they pivoted on some level somewhat aggressively, and I think the Fed's job to thread the needle to damp down this excess liquidity, this overly accommodative policy in a market where we created asset bubbles, and you are never going to see stocks and assets rally when you're removing liquidity or you're tightening. So really dramatic last couple of days in terms of market volatility, although the S&P and the NASDAQ are within 3% of all-time highs. So for some people, that probably makes them more nervous than happy. And it's just interesting, just before diving into cannabis, or we can talk about broader markets all you want, frankly. I love doing this, and I do this every night on CNBC. So it's great to be here doing it. COVID was actually a real fundamental driver for cannabis. And if you think about, the industry, not just because on the charts the stocks did better, but obviously there was a lot of industries that were haves and a lot of industries that were have-nots in COVID, and the cannabis industry was clearly a have. And so, the fact that we could be moving into more of a COVID headwind. I don't know if we're going to ever see lockdown again. Some of that should be good for cannabis. And so really what's winning out on the charts right now, though, is more a period of market volatility. And again, for cannabis, we're also not talking about the last week. We're talking about arguably a drawdown that's gone on for 9 months in the sector, but has picked up some steam in the last couple of weeks.
Right. So as you mentioned, some high beta stocks, some very volatile areas of the market, including cannabis stocks, they are down significantly from their 52-week highs. But the three major indexes, as you also mentioned, they are still trading very close to their all-time highs. And in fact, these major indexes have not seen a correction for many months now because investors continue to buy every single dip, every single pullback. And they keep on buying these broad market ETFs or mega cap tech stocks, which have supported the major indexes. So looking at 2022 or the rest of this year, what are your thoughts on the broader market? Do you think this volatility is going to continue, or do you expect Santa to show up later this month? Which areas of the market look attractive to you, and where should investors put their cash to work?
So in some sense, Santa is maybe similar to the Santa pull forward, maybe similar to the retail pull forward that we've seen. And if you tried to go out shopping on Thanksgiving evening after you ate your turkey, a lot of stores were closed because they'd already had a pretty good run starting in November between supply disruption and supply chain dynamics that had a lot of investors believing they should be buying sooner than later, and a lot of retailers and e-commerce plays doing their best. Did Santa come early? Look, a 10, almost 11% move in the S&P off the October 4 low, intraday low, to the intraday high that we set the Monday morning of Thanksgiving week is that's a pretty bountiful Christmas morning for a lot of children that are called portfolio managers, staring at the Christmas tree. Hey, that's a big run. And so here we are in the first day of December. I do think you can make an argument that we've already had a very strong seasonal trend. And when you marry that with where we are with some of the retail trends truly of the season, I think you've got an interesting dynamic. I do believe that the Fed policy dynamics of the summer, getting some sense and clarity on tapering, has had something to do with the timing of this. And I think that we had a wall of worry to climb into September. And as we got through some of the also seasonal weakness of September and some of the volatility there, I think you set the table for the rally that we've had. I still believe that the Fed is going to be less hawkish than they've sounded over the last couple of days. But I guess I have to be reminded of December 2018, when the sense clearly was by the market that the Fed was overly hawkish, overly aggressive, overly restrictive on policy going into the new year, and that we had a 20% pullback in December 2018. Not every December is bringing Frosty and Rudolph, but you have the Grinch stealing Christmas too. So I think what I expect is that markets are probably going to be sideways, potentially to slightly higher. But I think we are going to be wrestling with, first of all, a yield curve where the long end of the curve, I don't think, is going to get away from us. What's very clear is that the short end of the curve is starting to price in higher interest rates in 2013, and that we're waiting to hear more from the Fed about really how much more aggressive they'll be on tapering. Many people that have been following the Fed's balance sheet understand that even in a tapering environment, it still means that the balance sheet net on net is going to grow in 2022, at least as it's staked now. Should we get some sense that that's going to change more aggressively? I think the markets will discount that sooner. We had this chat on Fast Money last night, and it was kind of, it was packaged in, are these conspiracy theories that may be out there? And I don't know that this is as much conspiracy theory, but there could be a view that Powell is expressing a little bit more hawkishness on his reappointment at the Fed, because the Biden administration, much like the Trump administration, had dominance over the Supreme Court appointment process, this Biden administration is going to have some dominance over the voting Fed governors appointing process. And the view is that everyone from, Lael Brainerd, who was thought to be a leading candidate for the Fed chair and considered to be as dovish as they come, but her influence on the Fed is as strong as it's ever been. But that there's a sense that you're going to have a much more liberal, dovish approach to appointing new voting members of the Fed committee, and that maybe this is Powell trying to get out ahead of that and trying to at least set a tone of counterbalancing that. We'll see. But I do believe that the divergence, if you think about style investing between growth and value, I do think that we're at extremes right now between the multiples in growth stocks, and I guess I really do mean where 30% of the S&P's market cap is, and that's in 5 stocks, and those are not Microsoft, Apple, Google, Amazon, maybe now Nvidia. Those collective multiples are not Zoom and Peloton and stocks have had big pullbacks, but they're still very expensive. But I mean, those are, Apple, Microsoft, Google, while value on some level relative to other tech stocks, they are considered growth companies, right? They're mega cap tech companies, but they are considered to be buying growth. And because they performed so well, especially in the last couple of months, and if you look at semiconductors, for example, as the leader of that, semiconductors, the SMH or the SOX, whatever ETF you're following, but basically it measures the semiconductor index, has outperformed the S&P by 15% since that same October 4 low in markets. So I just think growth is overdone. I think sometimes people oversimplify this growth versus value thing, but value in the form of some industrial names, and certainly some of the autos, some of the banks, some of the other industrials, the shippers, I think offer pretty interesting opportunities here. And unless the Fed really swelches out the broader economic growth into the first and second quarter, I think there's room for investors to do well in some of those parts of the market that actually have, a market weighted S&P is probably underperformed the overall S&P by 6 or 7% in that time. So my view is that it's not going to be a runaway train of fun. But I think it's going to be very difficult for the Fed and more broadly central banks to move too quickly on the hawkish front.
Very interesting. Now let's talk about cannabis investing now. And these stocks have been much more volatile than the broader markets. In fact, just a few weeks back, pot stocks had surged. This was around mid-November when South Carolina Republican Congresswoman Nancy Mace she tweeted that she plans to unveil a new bill that would legalize marijuana at the federal level. And we know that these stocks and ETFs had surged after Biden's nomination late last year, because both he and VP Harris, they have generally been supportive of medical legalization as well as decriminalization of pot. And earlier this year too, these stocks were doing very well because investors were very hopeful for a more rapid path to full federal legalization with the Democratic majority in both chambers of Congress. But it seems that not much has happened since then in terms of legislation, legalization. So that is why these stocks have been sliding since February. In fact, most of them and stocks as well as ETFs are in the red year to date.
Yep.
So I was interested in your thoughts on recent legislative developments in the US. Do you expect federal legalization to happen anytime soon? And what about banking deregulation and other important bills that happen that we have heard about those bills, but it seems not much has happened on them?
So as you pointed out, it's the price action in the market has been held hostage to the federal headlines on legalization or not. And you rightly pointed out that the momentum coming out of the November 2020 presidential elections was extremely enthusiastic that this administration was going to be pro-cannabis, but maybe it was really not until the Georgia runoff when it appeared that the composition of the Senate was now going to be controlled by Democrats. And therefore, from the period of really the early part of late January of 2021 to a peak somewhere on the 10th or 11th of February, the cannabis industry took another leg higher. So they had the November election leg. They had actually previous to that, there was a leg late summer just on true bottom-up fundamentals of the industry, profitability and earnings season that was very strong. You got November elections on the federal level, and then you had the Georgia runoff that had the Senate composition. And it all brought cannabis to the peak that it hit for the year in the first 10 or 12 days of February. And since that point, cannabis has been struggling despite the fact that the fundamentals for the sector have gotten better, profitability has gotten better. Top line revenue growth in 21 will end up being anywhere from 30 to 40%. The addressable market grows as more states come online. Notables in 2021 were Virginia, New York. The fact that the East Coast is soon to flip to be a fully adult market to counter the West Coast. And the presumption is that much of the rest of the country will fall in line. But it's been a difficult path. And some of this, unfortunately, even for those of us that pick stocks and really want to believe in the story of companies that are operating at a better and more profitable clip, and there is relative value amongst the ranks, this has still very much been a top-down trade, and we've been beholden to the federal landscape. So just quickly to finish out what you described for your listeners that haven't spent as much time focused in on cannabis, yes, the last, call it 2 weeks, or let's just call it a calendar month, have been nothing short of extraordinary, even by cannabis's relatively high vol or very high vol history. But you had the industry going into November, really possibly the worst month since the drawdown from February came in October. And really the sense was that there was no federal solution coming on the horizon. And then as we got into the first week of November, on Friday, November 5th, as you pointed out, Republican Congresswoman Nancy Mace from South Carolina presented the detail to really first the media and the community that she was bringing forward a bill that was going to hopefully balance the needs of the states and their right to be autonomous as it relates to cannabis policy within their borders, but that would clarify some of the uncertainties and the incongruities, frankly, on the federal level around banking and taxation and potentially interstate commerce. And so this headline took cannabis stocks from a low, intraday low on that Friday, November 5th, to Monday morning, 7 days later, after not only had the market had a chance to formally get this news filtered through, but also Congresswoman Mace also, basically formally announced this bill in a press conference. So over those 7 days, so to the peak of that Monday morning, where a press conference was later that day, you had some of the biggest and highest quality names in cannabis rallied 50%. 50%. So a company like Green Thumb, which is a multi-state operator that I think many consider and is a high conviction name in my portfolio. It's near the top of the balance sheet, rallied 53% from an intraday low to an intraday high over that period, then proceeded to test all the way back down within 5% of that low later on in the week before some rally. And as we speak today, at least on Wednesday, December 1st, as we record this, is down another 7 or 8% today. And it's really back to those levels that it set before the big rally on the news. And so the question is, should we be encouraged or was that just a head fake? And I think the answer is, we don't know. What I'd like to point out as a fund manager managing an active ETF strategy in cannabis is that I am not investing for a federal solution tomorrow, next month, or even next year. I'm picking the best companies that I think thematically are exposed to the sector now, companies that have the best balance sheets, but maybe the best margin profile, the best assets. And of course, I'm investing across multiple subsectors that are operating within cannabis. And as a generalist in cannabis, my view is that yes, many of the most investable names are what we call vertically integrated multi-state operators in the U.S. Or vertically integrated LPs in Canada. There's still a lot of different ways to get exposure to the sector by investing in cannabis, and that includes we own real estate plays, we own technology plays, we own software plays, we own picks and shovels, so we own specialty retail. And I think, it doesn't really matter what posture or subsector you're exposed to in cannabis. The story here has still been very reliant on the federal news flow. And that's frustrating on some level, but it's not terribly surprising. And so what I would say about my view on federal legalization is, while I don't need that to happen tomorrow or next week or even next year to be picking stocks and to feel like I'm investing in an extremely high growth, long-term thematic trade that is soon to be a very sophisticated consumer product story with wellness, lifestyle, even ESG trends attached to it. The industry is down 30% in 11 days from those highs, on some sense that maybe we got overly excited too fast on Congresswoman Mesa's proposal. Now, I believe that a Republican-led bill that will be more tailored and more focused on legislation that frankly is passable in a bipartisan environment is a better way to go than the Chuck Schumer cannabis reform bill that was brought forth in July, that was a overly broad, overly wide-reaching, and an overly aggressive legislative attempt, I think. I believe that and this is, trust me, in the same way on fast money, no one wants to hear my politics, so this isn't my political view. I believe this is a view from a market's perspective, which is that the Republican proposal is more market friendly because it actually has less government attached to it. And do we have a shot of this happening? Maybe. One of the parts of one of the elements of the Congresswoman Mesa's proposal is what makes it interesting and what gives it potential is that it would be essentially an attachment to a safe banking piece of legislation that's already been passed in the House 5 times, hasn't passed in the Senate, but that could be tacked on to the National Defense Authorization Act, and which is a much broader piece of legislation that's going to be passed before the end of the year. And it obviously is mostly geared around the things that it's entitled about, but that safe banking in cannabis could be attached to that, and that's been discussed by both sides of the aisle. Ultimately, Chuck Schumer and the Senate majority is going to have to be willing to pull back from, seemingly overreaching policy requests of their own to strike compromise here. Can that happen? It's possible. Is there more progress than ever on the federal side? Absolutely. I mean, if you had asked me 2 years ago, would we be in a place where 78% of the country or so lives in a place where cannabis is legal in some form, where the criminal justice system basically ignores or has made it clear that cannabis possession and consumption is not a criminal offense, and that you'd had major progress in both houses of Congress, but certainly in the House, and that the Senate was getting closer every day. These are great moments for the cannabis industry. And therefore, the kind of price action that we saw in the last 2 weeks indicates the coiled spring that this sector is. So I'm not going to prognosticate on when we get federal. I'm going to tell you the markets will respond, but that investors that are investing now ahead of that are investing before a major wall of capital. This is a line I use because it kind of gives you the visual. And I think, Nina, I've talked about this in the past. I'm an emerging markets investor by background, so I'm used to investing in these markets, whether it was Brazil or Russia back in the late 90s or early 2000s, that, before there was a real institutional follow through, both for the asset class and to get exposure to the resources trade. You really saw this type of volatility, and investors that are here now, I think, are here well before the pack.
Right. So legalization is not only a US issue. And in fact, as you mentioned, pot is legal in some form in most parts of the US. And US has some of the most marijuana-friendly laws around the world. Pot remains illegal in most countries around the world, except for Canada, where it is legal, and just a few other countries. And I recently saw that Germany's new government is now in favor of legalizing cannabis. And if Germany does legalize recreational marijuana, it will become the first major European country to do so. So what are your thoughts on potential growth for the industry if Germany does legalize?
Well, I think it's very exciting to consider that the largest economy in Europe is potentially also maybe changing their political posture. Germany's always been, it's a very socially liberal environment, but it's also a very political conservative environment on some level. And I think the prospect of bringing a legalized cannabis market forward is never looked better in Europe. There's been a commitment to building out infrastructure in Europe, especially by some of the Canadian LPs. Tilray and their last earnings announcement basically showed where they had close to $50 million in revenue tied to European distribution and their exposure into those markets. This is clearly going to be an exciting driver for cannabis valuations. It's almost been forgotten on some level, whereas in the early days of investing in the sector, and as we got into 2018 and maybe even early 2019, there were a handful of companies that really touted their exposure to Europe. But I think most people recognize that the U.S. market was a better place to focus, and therefore a lot of the European conviction was short-lived. I think it's an exciting ingredient in what is a global industry, and that if you add in the numbers across the European Union, the addressable market is that much more attractive. I would fall back on, though, this is not a market right now that there's any question about the size of it. And a lot of that is also, what's good about that is what's been frustrating about the industry as well, because the illicit market on some level has been more emboldened by everything we've just talked about the environment being free of criminal justice concerns. There's really no social stigma, and it's been an ingredient to allow the social market to thrive, and actually at the detriment of the legalized illicit legal businesses. So, but again, right now, depending on who you ask, cannabis is a $40 to $50 billion business in the U.S. If you add in the illicit market, it's possibly a $100 billion industry. You add in the rest of the globe, and there are other legalized countries right now, Australia, Israel, but Europe will be a major driver, and I think it will be also important to helping be another domino to fall, where just solving some of the federal issues, and again, those are the most important issues right now, because the market's going to continue to grow, the states are going to continue to open up and operate and legalize cannabis within their borders. We still need to solve the banking issues. We still need to solve some of the payments issues. We need to solve, obviously, capital markets issues. And then we need to let broader, bigger institutional investors invest here. So you need to solve exchange listings issues. You need to solve some of the investability, but the custodial issues, the pipes, the infrastructure of the markets. These will be huge drivers to valuation growth. And I think that's the stuff that we're really excited about. We can't put a timetable on, but very little question about the size of the market here.
So I saw a report by Bloomberg News recently, and that said that Monster Beverage, which is the maker of energy drinks, they are interested in a tie-up with Constellation Brands, and this could potentially be a $100 billion deal. And we know that Constellation has a stake in Canopy Growth, almost 40% stake, and Canopy sells THC-infused drinks in Canada. And we also saw British American Tobacco's recent investment in Trait Biosciences, which shows their interest in CBD beverages. So do you see a lot of opportunities and more tie-ups in that growing category?
So the strategic interest in the sector has never been questioned, and Constellation was a first mover, an early mover, and arguably too early, but in their essentially buying their stake in Canopy with a chance to really turn it into, and they essentially are the controlling shareholder at this point of Canopy Growth, and Canopy Growth in turn has put down, call them convertible flags in the U.S. to own U.S. plant touching cannabis for when the market federally legalizes, but doing it all in a way now so that they maintain a federally compliant posture, especially for a company like Constellation Brands, who and Canopy Growth for that matter, who's listed on New York Stock Exchange. But obviously, Constellation Brands has been very careful as someone that's operated in new marketplaces, in emerging markets, and even though the U.S. is not an emerging market, this is a new marketplace with a complicated compliance structure. You can be sure they're going to be cautious and they're going to move at a pace that makes the most sense. If and when a Monster Beverage deal with Constellation Brand goes through, and that news has really heated up in the last week or so, and it makes a lot of sense. And then you suddenly have Coke into the mix as well, and there's some very complementary. Again, I talked about cannabis as ultimately a very sophisticated CPG business, and this is where it's going to be going at some point. So don't think that they're all at some point not determining their plan for how to grow into the sector. I don't expect, Coca-Cola would never move faster than the federal environment will allow them on cannabis, but Coca-Cola would absolutely love to be exposed to a high growth segment. And as you get into CBD and wellness drinks, and obviously Coke's already moved into other types of health drinks and vitamin drinks, that's the natural evolution of their business. And therefore, the idea, though, that these big global CPG companies come in as strategic investors to take out these companies that are building big businesses now, it's a catalyst for sure down the road. Again, it's not how I'm investing, but it absolutely has already at times been a major driver to the valuations of companies in the sector. It's also been a major head fake to investors. The move in Canopy Growth on the Constellation investment was exciting, but also very painful. I mean, stock's trading, somewhere around $10 right now. When Constellation made that move, it took the stock over $50 a share. Company's not profitable. They burned through a lot of cash, and while they are reasonably well positioned in the U.S., and I think with Constellation as a big brother here, they're going to bring all the sophisticated branding and distribution and marketing chops that any consumer products company in the world can bring. Investors need to be careful about just assuming that this is a one-way ticket.
Right. So now let's talk about your ETF. The ticker symbol is CNBS. And as I mentioned, it is one of the best performing ETFs in the category, in the cannabis category. I saw that in April, you added exposure to multi-state operators or MSOs, and that was via swaps. And CNBS now has almost 36% exposure to MSOs. So talk to us why you decided to add MSOs in the portfolio.
Well, first of all, as mentioned, I think the U.S. market's the largest, most attractive market in cannabis. So we want to be here, and we were very cautious about the regulatory path we followed to be able to get exposure to companies that are not allowed to list on U.S. stock exchanges because they are violating federal laws, even though they're operating totally legally in the states that they operate in. And these are companies that have had no problems and are we think some of the most interesting companies in cannabis. So we got approval after applying for this approval with the appropriate regulators, and have moved forward to own U.S. multi-state operators, the biggest, we think, most well-positioned in the best states, best assets. So it doesn't mean we're buying them all. We're buying the ones that we think operate, first of all, in states that are more limited licensed states, so not everyone can play. They have competitive positioning, competitive advantage. They have a moat around their business, so to speak. They've already proven profitability and free cash flow generation. Companies like Green Thumb, I mentioned earlier, or Curaleaf, they're two of the biggest weighted MSOs. In fact, I think they're the two largest positions in the fund as of today. So we've clearly allocated capital to the top of the balance sheet for this type of company that we expect to be long-term holders of, but also think we can be, we are an active ETF strategy. So we can trade around within this group. We own them through total return swaps. So it means that effectively we don't own the underlying security. We own the economic interest in the underlying security. So we effectively own the company. But this is no different than what a lot of companies, what a lot of investors do in other ETFs or in straight up investing. Swaps are obviously a very efficient way to have exposure, and also securities that we can custodize and we can put into our fund. So we've done this in a way that obviously is consistent with how we can run an ETF. We're pretty excited about it. And what's been exciting about the performance of the ETF and the way CNBS has been positioned versus some of the other cannabis ETFs, and why I believe we've outperformed, is I don't take an overly righteous view on hey, I have to own, the US is the best market. I would never want to own the Canadian names, or I'd never want to own a name in Israel or Australia. I want to own the stocks that are best positioned for investors right now for an industry at this stage of its development, and also in some cases the ones that I think are going to be proxy plays for other investors who can only invest, say, in a Canadian LP. So I own Tilray, is also one of the top positions in the balance sheet, if also sitting right there at the top with the others. Tilray has been the most profitable company in Canada, and I really mean Tilray after it merged with Aphria. Aphria was really the company that I owned, and when Tilray and Aphria merged in early 2021, the combined entity is now called Tilray. And Tilray, again, through Aphria, is the most profitable Canadian LP. They've got 6 straight quarters of EBITDA positive. They have largest market share in Canada. It's run by a CEO named Irwin Simon, who some of your audience may know was the CEO that started Hain Celestial and was very early on this whole organics trade and built Hain into a big consumer products company. I think, if markets are going to move higher, Tilray is going to move higher with them. And there are investors out there that say, oh, the Canadian cannabis companies are not worth owning and this and that. And I'm here to own, first of all, again, a portfolio that's thematic and long-term and best positioned as I endeavor it to be today. And in that sense, I own a combination of a few Canadian companies, a lot of U.S. Some of these companies in the U.S. are, as mentioned, call them the picks and the shovels. Some of them are technology companies, but it's been part of putting together a portfolio at CNBS that we believe is representative of how investors want to invest in cannabis. And it is a high growth sector where the thematic ideas here are alive and well, but that I do believe there's an opportunity to be active, and all these buzzwords. There is an ability to bring additional alpha up and beyond just investing in the sector.
Right. Active management makes a lot of sense in this industry, which is constantly evolving. And I have one last question for you.
Sure.
We have seen a lot of consolidation in the industry. So do you expect that trend to continue into 2022? And will we see a lot of consolidation in the US among the largest MSOs, or in Canada too?
I do think we're going to see more consolidation. It's a combination of there's actually some companies have more access to capital, have more free cash flow on their balance sheet, and frankly, valuations are really attractive here. So if you can make an acquisition today, it's a much more attractive acquisition in many cases than it was 6 months ago. I think there's naturally going to be consolidation in the industry. I think there's a handful of players that will be consolidators. I think in Canada right now, it would not be surprising for me to see even more consolidation, because this is at best a $4 billion market. There's way too much capacity in Canada. There are too many operators and they can't all survive. So yes, I think the combination of where the market's at, the access to capital, and that there are some stronger hands playing in the space right now after a big pullback means I think we're going to see significant consolidation ahead.
Excellent stuff. That's all we have time for today. Tim, thank you so much for joining us.
Nina, thanks for having me, and I hope we do it again soon, and hope you have a great rest of your day.
Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. And also make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.